Hi, I'm Nick McLean, and I've been in private equity and M&A for over 20 years. And throughout those 20 years, I've seen businesses that were set up to survive and thrive. And I've seen businesses that I was shocked they're still operating, that probably should have failed. And I've definitely seen businesses that also are on the verge of failure. In the US, 99.9% of businesses are small businesses. Over 33 million. That's huge. And in looking at these businesses though, it's just easy to see the ones that are going to stay the same size and struggle and the ones that are going to grow much more. Not to say they'll never hit a ceiling, but that ceiling would be higher. Are there common characteristics in these businesses that struggle more versus the ones that succeed? Well, first I have to be honest with you. Management, the team, the culture is very important. I can't dismiss that. Additionally, what's important is companies that have a more narrow focus as opposed to trying to be everything to everyone. If you've made it this far, then stay tuned because I'm about to jump into 5 industries that have higher than average failure rates and share why I think those industries experience those higher failure rates. And if you're an aspiring entrepreneur, then it'll be very informative for you to take these industries in mind as you're thinking about your entrepreneurial approach, not necessarily because you don't want to start a business in those areas, but perhaps because you want to buy a business. And are these 5 areas you want to avoid? Well, maybe not entirely avoid, but at least be more diligent in your evaluation process and perhaps pay a lower price. First category, transportation and warehousing. Approximately a quarter of companies in this industry fail after 1 year. Why is that? Well, there are different reasons. I would say one is capital intensity. If you think about a trucking company, many times trucking companies are asset heavy. Those trucks are expensive. You got to keep them utilized in order to earn a return on those assets. Additionally, a lot of regulation in this industry. It's complex, multitude of reasons, but those I think are the major ones why this industry has a higher than average failure rate. As it relates to warehousing though, one potential path that you can try to pursue would be to add more value added services. If all you're doing is putting parts and products on a shelf and shipping it off to somebody else, easy to replicate. If you start getting more ingrained in your customers' processes, whether it's a quality check or a minor assembly or something along those lines, I think your chances are probably a little bit better. However, it still doesn't negate the fact that you have a big warehouse that you got to account for. Second industry is information technology. Now, IT can be a very lucrative industry as well. However, there are a lot of information related services out there that are very low margin and are essentially just commoditized. Anytime you're in a commoditized situation, I think the risk for failure is much higher. If you're doing just the basic IT stuff, which is still important and still needed, how do you differentiate between your company and some other company? Well, you talk about quality and how you're the greatest. Well, do you know what that other company is talking about their quality as well? Well, if you guys are both saying how great of quality you are, if one of your firms offers me a lower price, maybe I go for that. Anytime you get to the point where you're competing on price, I think it's a very risky proposition. If you're not able to find more value added or more complex pieces of the information services sector to provide, and it's just the basic bare bones services, I think it's a risky proposition and it would be a segment of the industry I would avoid. Number 3, in no specific order, is retail. Up to 80% of retail operations close after 5 years in business. Now, 5 years isn't terrible, but come on, let's talk about businesses that last 10 or 20 years. Why is that? Well, in this day and age, everyone knows about the internet, of course. That's always going to be another competitor. there are still a lot of retail operations that survive and even thrive. As a one location retail operation, it's just incredibly difficult. The successful retail operators typically have a lot of scale. They have not just brand awareness, but they're top of mind brand awareness, you know, like all the QSR places or the big box retailers and whatnot. And even some of those face struggles. Trying to establish a new retail operation with no brand awareness, without the benefit of having a huge marketing budget, very difficult. Retail is an area that would really scare me, and I would be really nervous about starting a business in that industry. Next one is construction. See a lot of different construction companies for sale and or building materials companies for sale. And typically what we see is an owner that was working for another similar type of construction company, got fed up, started their own shop with the goal of doing things differently. And maybe they did, maybe they didn't. Problems with the construction industry though, one is the cyclicality. A lot of times construction companies are very subject to worsening or improving economic cycles. The improving one's great, but is your company going to be big enough to survive a downturn whenever revenues drop 20, 30%? It's tough to say. On compounding that cyclicality is that most of the revenues tend to be project oriented. So even if the economy's doing well, if you lose out on a project for whatever reason, then you can really put the company at risk. The project-oriented nature and the cyclicality are reasons that it's hard to make it in construction. Now, there are a lot of people that have made a lot of money, like some of the general contractors I've known throughout the years, or some of the general contractors I at least know of, even if I don't know them personally. Here in my hometown of Kansas City, I mean, sometimes they're the ones that are flying on helicopters and private jets, so clearly it is lucrative, but it tends to be the most lucrative for the largest of operators. Those largest operators tend to put a lot of pressure on their subcontractors, and for that reason, construction is a very difficult industry and has a high failure rate. The final business, which isn't an industry that I think a lot of people would want to buy an existing business, but still it's one that many people want to start off on their own, is restaurants and cafes. Similar to retail, it's very difficult to establish brand awareness and stay top of mind with consumers. Consumers' tastes change. It's hard to find employees. It's hard to have the ability to innovate in terms of menu items and whatnot, and keep up with all the competing offers from the various different segments of the restaurant market, from quick service all the way up to full service. I believe that owning a restaurant can be rewarding and it can be fun. It's a great environment. You know, people will know you. You'll feel like a minor celebrity perhaps. But in terms of businesses that are riskier and businesses that seem destined to survive for a long time, restaurants and cafes are definitely near the bottom of the list in terms of likelihood to survive. Now, I'm not saying those are 5 industries you definitely should avoid, or those are the 5 worst, but those are 5 that I think are definitely more prone to failure, but also ones that I've come across in my own career as a private equity founder that is out there buying businesses. Since we've talked about 5 businesses that are more likely to fail, you should stay tuned for the next video where we talk about 5 businesses that are more likely to survive. As it relates to the aspiring entrepreneurs out there that might want to buy a business, definitely a video you should check out. Additionally, if one video isn't enough, you should check out the course that I built on how to buy a business. Talk about businesses, or talk about industries that are great, industries that aren't. Really the whole process of buying a business, from finding a deal to executing the offer to finally closing on it, is included in that. There's a community, group coaching calls with myself, Really encourage you to check it out if buying a business is even remotely on your radar. There definitely is a fee for that course, but more importantly, I'm out there still trying to find good businesses to buy. And if I can get people in this course and they can find good businesses to buy, I want to join alongside them. So now you know why I'm doing it, at least to some degree. Check it out, and who knows, maybe we'll be business partners in a few years. Thanks for watching.